Hey, good morning.
Hey, good morning. How are you?
Doing well. How are you?
Yeah, I'm good too. Yeah, could you
All
could you
right.
add our official account as one of the speaker as well?
Yeah. I sent the request.
We Let me check. Oh, not sure what happened, but anyways, it's okay.
Let me try it again here. It's probably just a Twitter issue. That $44 billion investment hasn't fixed a lot of things.
Yeah, exactly.
Anyway, how you doing today?
Yeah, I'm good. I'm good. I'm good. Just working around for the whole day. Very busy.
Yeah, I feel you. We just got home yesterday. My wife and I just had our first kid a couple days ago.
Yeah,
So,
congratulations
yeah,
for
thank
that.
you. Super busy, but in a good way.
Yeah, cool.
Let me, yeah, I don't, I sent a co-host invite to the main account since the speaker invite's not working.
Um, Seems there no response, but anyway, it's okay. It's fine. It's fine.
All right. Well, we got it recorded, and then we'll get it up on YouTube pretty quickly after, and should have. We've been tending to get a lot more replays than live listeners. I think
Okay.
just kind of the depths of the bear market here. You know what I mean? So
Yeah.
it is. It's just the battle we're all facing right now. So,
Yeah, exactly.
but no worries. Yeah, I got it recorded. So let's kind of go ahead and get started if you want to.
Yeah, cool. Let's start.
All right. What's up, everyone? My name is Relentless, the owner of Defi Raiders. Welcome back to another Defi Raiders AMA. Today we're talking with Matt from Vaultka. Vaultka is a protocol that provides customized vaults that are designed to optimize the return of the PerpDex LP for each prospective PerpDex and Arbitrum, and currently hosts vaults for GMX, Gains, and Vela with a whole lot more in the works. So, Matt, thanks so much for joining us. Really excited to talk to you. You want to go ahead and give kind of your intro and background and how you ended up on the team?
Yeah, cool. Thanks for having me. Very nice to be here. So, hello everyone. I'm Matt. I'm co-founder of Vaultka. I have been working for certain hedge funds for crypto portfolio management previously, and I enjoy playing around with different protocols and exploring new farming opportunities. And I really like the pace in the crypto world. So, in Vaultka, I'm mainly involved in the strategy planning as well as the project management. Yeah, nice to be here.
Nice, very cool. Yeah, it's great to have you. So I know I sent over the general kind of flow first, but what I want to ask first is kind of like, where did you guys get the idea for Vaultka, right? So what was the idea of, hey, we need to aggregate all these kind of vaults and options into one place?
Yeah. So first of all, I think I need to talk a bit about our position. So basically, we position ourselves as a catalyst of decentralized perpetual exchange on Arbitrum. And why we do so is because we feel like there's a hype for the perpetual exchange. There's a need for the perpetual exchange. We can see that the perpetual market for the traditional perpetual market, there's a lack of faith that many people have currently in the centralized exchange. For example, for the recent events such as the FTA situation, have shown that a centralized exchange can be vulnerable to hacks and manipulation. So we can see more and more traders and investors are turning to decentralized exchange as a safer and more secure alternative. And that's why we can see that there are more and more perpetual exchange are building recently. For example, we have GMX, we have Gains Network, we have Federal Exchange, we have MUX protocol, and much more, much more. And we can see that this will be the trend in the upcoming future. There will be a loss of product to build the perpetual exchange. So I think for this market, there is a necessary for us to build something on top of them to aggregate off them, because as a trader or as a user, it may feel confused if they see there are so many projects and so many protocols for them to choose or to use. They do not know which one is the best. But for Vaultka, we build optimized strategies on top of different perpetual desks. So we aim to provide a platform that we can aggregate all decentralized perpetual exchange LP, providing a one-stop platform for perpetual exchange liquidity providers. Because it is the main goal for the liquidity providers for the perpetual exchange is to earn yield, right? So basically, they need to search for different protocols to see which protocol can offer the highest yield, or to see which protocols can offer the safest yield and the most reliable yield. So they can just come to Falcon because we would aggregate all the LP strategies for them. We can optimize all the best strategies that we can provide to them, so that for users, they just need to get into our website and see which strategies that they most like they most love it, so they can choose it and they can just sit down and earn the yield that they want to be, instead of just searching around for many protocols instead. So that's why we built Vaultka.
Yeah, very cool, very cool. Makes a lot of sense. I mean, I agree with you. There are a new perp. It seems like there's a new perp dex launching every other day. So it's hard to keep track, especially if you're not doing this day in and day out. So all right, so cool. So all right, so let's launch into kind of everything about Vaultka. If you want to first just kind of give like the high level overview of what you guys offer and how you guys are structured, and then we'll dive into each vault individually and go from there.
Yeah, cool. So yeah, maybe to briefly introduce Vaultka, as I mentioned earlier, we position ourselves as a catalyst for decentralized perpetual exchange on Arbitrum. So to explain more about that, so perpetual exchange allow traders to speculate on the price of an asset without actually holding the asset. It is a popular way of trading in the crypto world, and you can see it has become increasingly popular in recent years. So basically, what Vaultka provides is we offer one-click strategies for LP tokens. So we make it easier for users to manage their LP tokens and boost their reward. So currently, we have um, four products are going to build, or some of them have already launched. The first one is the market neutral strategy. So basically, what market neutral strategy allows traders to take a neutral position in the market, meaning that they are not betting on the price of an asset going up or down. And the second one is we offer a leverage strategy, which means we allow users, we allow traders to amplify their gains by using leverage. And the third one is we will have the LP index, and the last one we'll have the liquid staking, which will be one of the key products in our roadmap. But currently, we have launched the market neutral strategies as well as the leverage strategies. So our goal is to build a platform that aggregates all decentralized perpetual exchange LP, providing a one-stop platform for all liquidity providers. And we want Vaultka to be the first platform built on top of multiple perpetual exchanges. So by providing a one-stop shop for perpetual exchange liquidity providers, we hope to make it easier for users to access this exciting new market. So so to wrap up, Vaultka is a DeFi project built on Arbitrum with a mission to support the growth of the Arbitrum ecosystem. So our platform provides one-stop shop for perpetual exchange liquidity providers, making it easier for them to manage and maximize their profit. Our team is excited to be a part of this growing ecosystem, and we look forward to seeing what the future holds for Vaultka and the wider DeFi community.
Yeah, very cool, very cool. And yeah, I think there's obviously clearly some excitement a little bit about what you guys are offering users. Your TVL has kind of exploded over the last couple months, as you guys have built on top of a couple other platforms. So, got to be very exciting for you guys moving forward, especially like in the current market to see your growth happening right now is pretty cool.
Yeah, thanks for
So.
that.
Yeah, absolutely. All right, so let's talk about, first the, kind of the main things that you guys offer is your vaults. So currently you guys have vodka, whiskey, and sake, cleverly named. So let's talk about each one and what they offer and kind of how they work. So first, let's talk vodka, your GLP Delta Nutravolt.
Yeah, cool. So for Vaultka, it's actually a GLP delta neutral vault. So for those who are not familiar with GLP, GLP is the LP token of GMX, which is a decentralized perpetual exchange on Arbitrum. So what we need to know about is that there are certain features for different LPs. There are different models, I would say. For example, for the GLP is actually consists of a basket of asset, which means around 50% of it consists of BTC and ETH, and the remaining part is consists of the stable coins. So what we can imagine is that the GLP price is actually fluctuate with the markets with the market movement. For example, when BTC and ETH drops, GLP price will suffer. And on the other hand, if BTC and ETH price increase, GLP price will also increase. So we can see they are both good and bad, but it is some kind of volatility and uncertainty that not everyone would like to see about it, because if a user wants to become a LP providers, what they want to achieve is they want to get the trading fee from the platform. So basically, for all LP tokens, their main source of reward or the main source of yield is coming from the trading fee or the protocol fee from that decentralized exchange. This is the most sustainable and the most foreseeable and also the most juicy yield that every LP providers want to capture. But in the case of GLP, because of the basket of asset which consists of BTC and ETH, it adds one more layer of uncertainty to those LP providers. So what we are doing in Vaultka, what we are doing in the GLP Delta Neutral Vault is we basically help those users to hedge those BTC and ETH exposure. So yeah, for the end result, for users who deposit 100 USDC, let's say, to our vault, they can enjoy a 100 USDC LP exposure without any effect from the market movement. So yeah, so this is how the basic concept and what we did for the users. But to talk more detailedly, we will calculate the amount of the BTC and ETH that for that LP tokens holds. And after our calculation, we will do a tons of things. We will simulate and determine the amount that we need to be hedged for those users. And then we will have Fashion on balancer, and we will convert those borrowed amount and convert into Uniswap, and we will deposit all those things into RFA, so that for those borrowed amount, it is just like a short position for the BTC and ETH, and with the original exposure of the BTC and ETH inside the GIP token, we can have a zero delta, which means the whole position is not affected by any market movement. So yeah, so it is a little bit complicated, but the end result is user can enjoy a zero exposure of market movement, but they can still enjoying the yield from the protocol fee, the yield from the trading fee, or the yield from the borrowing fee, liquidation fee, etc. Yeah, so this is the main concept of what we did for the delta neutral strategy.
Okay, very cool. So the big piece here is the not being affected by the market movement, right? So for example, if you go on to GMX's website and you buy GLP, right? So when people look at just the numbers, right? You can get GLP for a 10% APR, or they'll go on Vaultka and see, well, I only get 6% APY here, and there's these fees. But the difference is, right, if you're using GLP itself, you're affected by the market movement.
Yeah, exactly. Which is something I believe some users may not to see.
Yeah. Okay. Very cool. Very cool. Yeah. So and so that 6% APY is just kind of fixed after everything, and basically, kind of guaranteed as much as possible.
Yeah. And for example, in the previous week, we have the market drops a little bit, which means the BTC and ETH price dropped. So at that case, our delta neutral vault will exactly outperform the performance of GLP, because we can see the GLP price will be affected by the market movement. So in case the market performs not good, or the market just drop badly, in this case, delta neutral vault can offer a really stable and really sustainable yield for the users to keep earning from the trading fee.
Okay, very cool. And this is after the fees, correct? Like it's outperforming after your fees?
Yeah, exactly.
Yeah, interesting. Oh, very cool. Yeah. Okay. Yeah, that's pretty enticing. Yeah, I could see kind of now why people are why your TVL is starting to move. The not being affected by the market is huge. I mean, that's kind of like the gist of delta neutral anyways, but in order, being exposed to GLP, which obviously a lot of people want to be, and kind of being able to have a fixed earning, is pretty cool.
Yeah.
All right. Okay, very awesome. All right, so let's move on to obviously, smart to start with GMX and GLP and then kind of expand from there. I've been following you guys since you launched originally with the GMX, and I like what you guys are building. So let's kind of talk further, and let's get into, let's start talking about kind of the leverage vaults you guys got here. First, we'll start with Whiskey, which
Okay,
is
cool.
your GDI leverage vault. Do you want to break that down for us?
Yeah, exactly. So basically, whiskey, I would say, whiskey and sake is a similar product, which means we are using a leverage strategy on top of a perpetual debt. So let's talk about whiskey first. So whiskey is one of our leverage strategy that we built on top of Gains Network. So Gains Network is also a very big perpetual debt on Arbitrum. And what we did for them is we have the LP tokens of Gains Network, which is GDAI, to have 3x leverage on their rewards, and also the trader P&L, something like that. So what we did for them is very straightforward. So when a user deposit 100 DAI on our whiskey vault, we help them to purchase 3x amount of GDAI. For example, if the user deposit 100 DAI, we will help them to purchase 300 DAI. And at this point, you may ask, where is the 200 DAI coming from? So this is exactly how we build the whole thing. So apart from the whiskey vault which will operate the leverage strategy, we have another vault which is the lending vault. So the lending vault, the purpose of lending vault is very simple. It's just providing and lending capital to the risky vault. So whenever a user wants to have their leverage exposure, they need to borrow extra money from the lending vault. So in this case, it actually separates two kind of users. The first kind of user is they want to have a higher exposure. They want to take leverage position. They want to earn a much more higher trading fee or the yield of that. So they would choose the leverage position. They would like to take the 3x leverage because if they take the 3x leverage, basically they can earn 3 times more than the original position. If the GDI APR is like 10%, they can enjoy a almost like a 30% APR. But in return, they need to suffer a more risk for the trader P&L because as we mentioned earlier, one of the risk for the LP token holders is that they are actually the counterparty of the traders of that perpetual exchange. So whenever the traders on James network is having a profit, LP tokens holders will actually suffer. So in this case, if they are having a 3x leverage exposure, the trader P&L will also 3x amplified. So this is one of the risks that leverage users need to concern about. But actually, overall, we can see traders tends to lose money in the long run. So yeah, I think for this risk, it's something we need to keep in mind, but we do not have to worry too much about it. Yeah, so for lending vault, what are the benefits that they are getting from? So this is also one of our unique approach. For the traditional lending vault or the traditional two vault strategy, they are having a fixed interest rate or a variable interest rate, which means the leverage user has to pay a fixed interest rate or at least a certain interest rate periodically to the lenders. But we believe this approach is not something that many people love it because it actually makes it actually unfavor to the leverage user. So for example, the leverage user opens a leverage position when they do not even making a profit for that position. They need to pay a portion of the cost to as the interest to the lenders, but in return they may not have enough profit on that strategy. So it makes leverage users feel unsafe because it just adds on their upfront cost for executing this one. So this will make them hesitate. But what we are doing right now is we implement a unique approach called the reward speed mechanism. So we do not adopt the interest rate model. We adopt the reward speed mechanism. So what is this reward mechanism is that the leverage user will split a portion of the profit when the strategy has a certain profit. So what it means is that if the leverage user earns money from the execution of that strategy, they need to split a portion of that profit to the lenders. So in this way, lenders can actually earn a higher income comparing with the fixed interest rate that for those traditional protocols are using. Why is it? Because what we are choosing for those leverage strategy is some high yield strategy. For example, GDI, currently we have around 10% APR, which amplified it becomes around 20 to 30%. And also the VLP strategy that we will discuss later, which also has a very high yield of APR. So in this case, we are quite confident that the leverage traders will make a certain amount of profit. So if they make a profit, they need to split a portion of that to the lenders. So we call it a win-win situation for both lender and leverage users. So for the leverage users, they do not have to pay upfront, and for the lenders, they can actually earn higher than the fixed interest rate model. So we implement this mechanism to balance between the lender as well as the borrower to make sure that the capital is utilized very well. And one more thing is that we actually separate these two pools in order to differentiate about different types of users, because you can see for the users that are choosing the leverage route, they are more risk taking. They want to have more risk, but in return, they can have a higher return. But some of them are much more risk reverse, which they do not want to bear the risk of trader P&L. They just want to enjoy the profit of the strategy without bearing much risk. So in this case, those people will choose to become the lender, which they will deposit in the lending pool. So we believe by separating two kinds of user into two kinds of pools, we can maximize the capital efficiency of our strategy. So yeah, so back to risky. What we are building is we are building a 3x leverage for the GDAI, and also we have actually optimized some of the features to make the user experience much better, comparing with they just use the gains level platform. So yeah, so one thing is that there is a time lock period for GDAI user. So if everyone has tried to use gains network, actually there's a time lock when they want to withdraw their GDAI. And there is a two-step process. The first one is they need to click the request withdrawal. And the second step is they need to wait for 3 days to 9 days. And after that, they need to go back to the website again, and they need to click withdraw again. So actually, I think this makes people or users that the user experience is not quite good. So in our risky strategy, we optimize this two kicks function for them. So once users click the request withdrawal, we actually help them to save the time, and we will help them to automate the withdrawal process when the time comes. So for the user experience, it will be much better for them. So they do not have to calculate, or they do not have to mark down the schedule or mark down the time that they need to come back again. But instead, we will do this for them automatically. So yeah, so this is the introduction for what we are building in the risky vault.
Yeah, very cool, very cool. Yeah, I like it's I'm terrified of leverage for the most part, but it's nice to think like a safe a safe leverage position in a way, relatively speaking, with safe kind of returns and not having to do a ton of the work myself, on a platform that I want to be exposed to. So I like it.
Yeah, cool. Thanks for that.
Yeah. And very well thought out, by the way. I mean, there's a lot to unpack there. So, but I like what you guys have built there, and with the options that you guys are providing to people there, especially. So, all right. So, and then you've got one more leverage vault that I know you guys are super excited to talk about because you just launched it, your VLP 3x leverage vaults, that's currently working on top of Hyper VLP as well, to getting a ton of rewards with that. So let's launch into that and kind of talk about Vela and what you guys are doing with their vaults.
Yeah, cool. So yeah, basically for the VLP leverage strategy, which is the second vault, it is our core product. And it is the one that we spend most of the time for it, because we believe it will be really useful for users, as well as we believe it would be a really good product for users to use it. The first one, it is having a such high APR currently. we are having around 40% of APR with just depositing with USDC. So I think this is really amazing, which I think it should attract many people to use it and try it. Yeah, so yeah, I will explain more about the mechanisms on what we did on the second vault. So actually, similar to what we did in Risky, we are offering a 3x leverage on the VLP LP token. So VLP is the LP tokens of Value Exchange, which is also a perp desk on Arbitrum. Yeah, so for the mechanism wise, we are still separating into two pools. One is the lending pool, which used to provide extra capital for the leverage users. And the second pool is that users can deposit in our secure leverage pool so that they can enjoy a 3x leverage. Yeah, so one thing that we are doing is that we are helping user to amplify their reward that receiving from the VLP. So what we need to know about VLP is that VLP, the mechanism of VLP is a little bit different with GLP. So as I mentioned earlier, GLP is actually consists of a basket of asset which consists of a half of BTC and ETH. But in VLP, there's no such issues. All of the asset behind VLP is USDC. So basically, it is already a market neutral position for the VLP holders, which means VLP token price will not affected by any market movement because there's no other non-stable exposure inside the VLP. So in this way, we can actually try to amplify the reward because there's no market exposure risk inside already. So we can amplify it. We can offer a 3x leverage. So for those users who deposit into our 3x leverage strategy, they can simply enjoy what they can have originally in the Fed exchange. So for example, Fed exchange, if the APR of Fed exchange is around 10%, we can basically offer them a 30% APR in our second vault. It is very straightforward and it is very simple to use. And the logic is, I believe, it's very simple. So you deposit 100 USDC and you get into the exposure of 300. So I mean, this is a amazing experience for all users, especially for those who love Fed Exchange. For those who want to mint VLP from Fed Exchange, I believe those users should definitely come visit our website to have 3x leverage, because when you have conviction on a certain exchange, when you have conviction on that exchange can perform well, you can take a higher risk. And what we are offering is that we are trying to minimize the risk that user will face, because VLP is actually consists of USDC only. So I don't think there's much risk for them need to suffer. So it is a very good opportunity for users to try the 3x leverage on the VLP. And apart from that, we know that FedEx Exchange is having the Hyper VLP 2.0 event currently, which they offers a really good and really juicy yield by minting their VLP. And as we are doing a risk leverage, we can actually amplify this juicy yield as well. So if you can get a 10% hyper VIP reward from Vela, you can get a 30% of hyper VIP reward. So this is just I believe this is it's just a gift for all the users that use our platform. And we can also see that the current APR of Sake Vault is 41.73%, which I mean, it is a very good opportunity for all users to try out. Yeah.
Yeah, so basically they're getting leverage yield and 41% APR, and they're only exposed to USDC.
Yeah, exactly.
Yeah, I'm interested real quick, just a little side, kind of thought thing here is when you go into DeFi Llama, which, everybody, let's go into yields here and check some stable coin yields here. I mean, that's incredibly high in comparison to a lot of as far as just a single-sided exposure to stable coins. That's one of the highest.
Yeah, and I think when comparing to those Aave and Compound, which offers only 2% or even lower, I believe a two figures APR is definitely outperform all the stable coins you found.
Yeah, especially there's only a couple on Arbitrum and those are APY. I don't see any on here on Arbitrum that have a higher APR for a single exposure to USDC, so that's pretty freaking good.
Yeah.
And then how is that? And I mean, I know you guys, it's hard to make certain predictions, but I'm sure you've kind of tried to do some modeling. Is after the hyper VLP ends and it's just regular VLP, what are you guys kind of expecting to be able to offer there without the amplified rewards from the hyper VLP?
Yeah, actually, we have to do some estimation that we can see it in maybe in two ways. The first way is that we estimate and we look at the current figures of Fed exchange, and we can calculate how much trading volume that they are generating currently. And wait a second, let me open the Fed exchange website. And one thing we can do is that we can project the trading fee with the current figures that they are offering. So because we can see that for those who don't know, VLP APR is basically calculated by the trading fee generated by the trading volume or even the borrowing fee from the Fed exchange. So we can look at the figures on VLP on Fed exchange and see what is his current analytics. So yeah, let me refresh the page, and we can actually wait a second. Yeah, so we can actually see that the currently the total users for Fed exchange is around 2.4K, and the total volume is just over it just exceeded 100 million. So with such high volume, the trading fees that generated with this volume is just crazy. And we have currently a projection for that if the trading volume um, remain unchanged in the coming weeks after the end of the Hyper VIP event, the APR of VLP will, I think, it's around it will exceed around 10% to 12%, which we have the assumption that it is remaining unchanged. I have not saying that there will be exponential growth after that, because Fed exchange is going to have some trading competition to boost the trading volume, and as well as they are also will do some marketing campaign in order to boost the trading volume after the Hyper VLP. So I have not include these factors, and we can calculate a 12% APR from Fed exchange. So by just taking these very conservative figures applying to our files, we can offer a a 35% APR for users who using our fund. So which is really crazy and really good for all users. And if we project an increase or with a I think a normal growth rate for the total volume of the Fed exchange, we can expect a higher APR. For example, we can expect a 20% or even 30% from VLP solely in the VLP. So if we adopt the 30% APR in Fed exchange, we can actually offer a 80% to 90% APR to our VX leverage user. So yes, I believe this is an estimation that our team believe it will happen in the future because Fed Exchange has just launched their mainnet version for just 1 week, and we can see their result, their figures is just so nice, and we can project that these figures will only become better and better, and we can foresee that the trading fee will become higher and higher, and so does the APR of the VLP. Yeah.
Yeah, that's awesome. That is a crazy yield for a single-sided exposure. And that's good projection, right? Because you would think, right, when hyper VLP ends that the rewards are going to go down, but based off your projections, they're actually going to go up. So yeah, very interesting, very cool. I could see why people are starting to pick up, kind of the reasons for using what you guys are offering. So yeah, I'm very excited to see that play out. And this is not financial advice, but I'm probably going to deposit some of my USDC on here so I can benefit from this for sure. And it's, why not gain some exposure to VLP, right? By just using my stables. So
yeah.
Very cool. Awesome. All right. So I love the vaults that you guys have rolled out so far. Very cool. All right, we'll talk a little bit about some more of that stuff kind of when we get down to the roadmap. But one thing that we'll kind of move on from the vaults, which we've covered in depth. But one thing I really want to talk about here that I think is really cool is what you guys are doing for security, right? And when everybody talks security, we usually think, all right, how is this protocol audited? Right? If you guys want to see their audits, go into their white paper. They've got their audits and bug bounty results and all that stuff published in there. But what I think that you guys are doing really cool is the V safety factor, which is almost like an audit of the pools themselves, right? And what people were able to deposit in. So you kind of want to like break down your V safety factor and and how that kind of gives an evaluation of the safety of each strategy level.
Oh yeah, cool. Yeah. So basically, V safety factor is a metric that developed by our team in order to determine the safety rating of a strategy, because we believe that we are offering a new opportunity for users. But in this way, we have the responsibilities to let users know what risk level that they are taking, because we believe that users do not well informed with their risk usually when they are using DeFi protocols. That's why we feel like there's a need for us to build a factor in order to make them more easier to quantize the risk level that they're taking. So for the V safety score, we are actually analyzing some key aspects of that strategy. For example, we have taking consideration of the smart contract risks, the underlying protocol risk, the market volatility risks, strategy risks, as well as the risk of that stable coins or even the chain safety risk, etc. So basically, V Safety Score provides investors with a comprehensive understanding of the safety level of the strategy. And the main purpose of this is to empower investors to be more informed by quantifying the potential risk, and it just goes beyond a simple assessment of individual risk factors, and we take into consideration into the interplay between different elements that I just mentioned. And look more deeply, actually, we are using some stat methods to have this calculation. So we are I'm not a tech guy, but I can briefly introduce on how the mechanism work in the high level. So we will have take consideration on the VAR, which is the value at risk, within a 1 year period. So what we do is we will estimate the potential loss of that investment or strategy that may face within a 1 year time frame. And with the context of the V-safety score, we will utilize it to assess each risk associated over 1 year of period. And after all these calculation, we will combine them and assign a weight to each risk category based on the relative importance of that category. For example, we may feel like the smart contract risk is having a higher rating than the market volatility risk because we feel like smart contract risk is a more serious problem. So we will assign a higher weight for it. So by applying different weights for each components, we can ensure that factors with higher significance receive appropriate consideration in the final score. And after incorporating these weights, we will just multiply each risk category score by its corresponding weight and to obtain a finalized weighted score of it. So the finalized score is what we can see in the in our official website, and that's how we try to utilize the risk safety score to inform user in a better way that to better quantize the risk level that users are basically taking.
Yeah, no, I think it's awesome. I think we hear a lot about like, well, you got smart contract risk and all this stuff, but for users who are coming in who want exposure to some sort of leverage trading or want exposure to a perp dex, but don't really know one how to trade perps correctly, or and overall how to assess the risks themselves. I mean, this is a pretty high level high level kind of risk assessment that you could provide to them for good returns. So I like it. I like that you guys are offering something outside of just saying, hey, be aware of a smart contract risk. So you guys are doing kind of thorough, in-depth assessments of these protocols that you guys are working with, which I think sets a high standard for what to expect from you guys.
Yeah, thank
So
you.
yeah, you don't really see it a lot of projects doing thorough, for example, right? So a project wants to host their LP on another DEX, right? They're not taking any, that DEX will accept that LP, right? And their whole thing is, well, we just accepted the liquidity. We're not responsible for whatever happens with this provider, and they don't really do any, you know, assessment of that risk, which I think this is something
Yeah,
new, and it
exactly.
it should probably be something that more protocols do.
Yeah, because we feel like that we have saw many cases that users was suffering just because they are not familiar with what risk level that they're taking. For example, when a retail users they saw a really high APR, they would just add in without considering any risk involved inside. So I think it is somehow an education to the public that we want to have we want to fulfill the responsibilities as a protocol owner, as a builder in this industry. I believe we all have these responsibilities. We all need to do this to better educate the public or the market that what risk that they are taking, and we need to let them know with a certain high APR, there must be some risk involved inside. There's no free lunch in this industry. The users cannot expect they can earn very decent APR without taking any risk. I think it is not a possible situation. I think this one is our job to let the public knows.
Yeah, absolutely. And I love that approach. Love that approach. All right, so cool. Yeah, we covered that. Let's let's dive into a little bit of the roadmap here. So first, first thing I want to talk about is near long term, what you guys are looking to roll out with your vaults. Who you can, whether you can or can't talk about specific ones. I know you guys are working on the Gin Vault with Mux. What other kind of things do you guys have in the works there?
Yeah. So basically, um, we will in the upcoming months, we will be launching a tons of strategies on top of different products, including what you just mentioned, Moss protocol, as well as level finance, as well as GMX version 2, etc. So actually, one of our main goals for this year is to provide at least one optimized product for every major arbitrum perpetual exchange. So currently, we have already integrated with the three biggest perpetual desks in arbitrum, which is GMX, Vela, and Gains. And we can foresee that there are more and more strategies are coming. And we believe that this will help us to establish ourselves as a trusted and reliable provider of decentralized financial products. And in additional to our existing product offering, which is the market neutral strategy and the leverage strategy, we are also planning to launch a LP index token, which means that for this LP index token, we will allow investors to gain exposure to a diversified portfolio of liquidity pools. As I have talked in the very beginning of this AMA, we foresee that there will be more and more perpetual desks coming in the upcoming futures. And as the users, we can offer a better product for those users to gain exposure into a diversified portfolio, because we believe for each LP tokens there are certain risk level. The risk level will be different because for some big lamps such as GMX Fair Gains, they are more battle test, so they are more safe to use correspondingly. So we can apply our professionalism with what we did in the re-safety score. We can have a better judgment for the rating on different LP tokens. So basically, we will allow investors to have a exposure on the whole perpetual debt market LP, instead of they need to look individually one by one to assess which one is better, which one is not, etc. So we would do all these things for them, and we believe that an index token is a very useful product for most of the investors that won't spend a lot of time into the space. So this is how we think it is a valuable addition to our product suite, and we provide our users with more opportunities to maximize their returns. Yeah, and also we will also focus on building a strong and engaged community of users and supporters. And we are also working to foster collaboration and cooperation within the crypto community. And we are committed to supporting other projects that align with our values and goals. Yeah, and we believe this community will play a critical role in driving adoption of our products and helping us to achieve our long-term vision.
Yeah, very cool. And I think index funds, obviously something that have been talked about, haven't quite been solved. But I think LP index fund will be, will be something very attractive to a lot of people who want to get exposure to a variety of different asset classes, or maybe not asset classes, but different baskets, right? Because the general gist when we talk index funds is a basket of Bitcoin, Ethereum, and stuff like that. But within DeFi, there's so many different yields in so many different places, and so being able to offer an LP index fund, I think, will be very attractive, and I'm looking forward to seeing what you guys roll out there. All right, and then let's kind of talk about your the VK asset that you guys are working on, and what's going to be the utility of that.
Okay, so for that one, it is also um, a a product that we are going to implement in the future. So for the VK asset, basically what we are doing is for those who don't know, VK asset represents the perpetual debt V tokens, which means the governance token of respective perpetual debts. For example, the GMX token, the GNS token, the Fella token, or the MCP token. So Vaultka is going to provide a liquid staking options for users to stake their perpetual debt V tokens and receive corresponding receive tokens, which is called the VK assets. What the purpose of doing this is, as we are positioned ourselves as the catalyst of perpetual debt, and that's why we believe we need to have this product offered to our users to have them can maximize their yield. For example, if they deposit GMX token into our VK asset, we will basically help them to auto compound the staking rewards to the to back to the GMX pool. In long term, we believe we can attract more and more voting power of that tokens. For example, if 10% of GMX token holders deposit their tokens into our vault, we basically have 10% of the governance rights rights for GMX, and so does other protocols. And we hope to gain more um, voting power or more controlling power to the perp because we believe we are contributing to the perpetual debt ecosystem, and that's why we believe we can have more voting power in order to further contribute to the ecosystem. So we hope to have this through the VK assets, and we believe by accumulating more and more VK assets and accumulating the voting power of corresponding files, our reputation or our vision can be more easily to achieve. And I think the final beneficiaries will be the users that using Falcon or the whole perpetual debt ecosystem, which it is the original vision that we want to boost or we want to contribute to.
Yeah, awesome. Yeah, I think that's a great approach. Would definitely want to be able to have some kind of influence on the ecosystem outside of just earning extra yield if you're supporting in this kind of capacity, right? I think that totally makes sense.
Yeah, exactly.
All right, and then one thing that I'm super interested in, and I've had a lot of discussions. We talk about this on some of our weekly kind of series, is the evolution of stable coins, as you're seeing them backed by liquid staking tokens and all kinds of different things. And I see in your documents that you guys have that in your roadmap, and I wanted to kind of get what your approach to your stable coin is going to be.
Okay, cool. So yeah, so for the stablecoin part, it will be somehow a long term things that we want to build. It is also contributing to the perpetual debt ecosystem. So what we are hoping to do is that we hope to issue a stablecoin fully backed by LP related tokens or LP related assets, which includes the VK asset that we just mentioned about, or the LP tokens, which means the Vaultka, risky, or even or sake leverage tokens, something like that. Which means these assets will be used as collateral to support Vaultka stablecoin. So in this way, we believe this will be the capital efficiency will be much more higher, because we can see LP token is actually a relatively safe without much market volatility. The price will not be dropped. Will not be dropped suddenly, such as BTC, those kind of things. The price of LP tokens is relatively stable, and that's why we believe it is a really good choice of collateral. In this way, the stable coin is actually a yield-bearing stable coin, because the collateral inside is having a decent amount of yield in every block. For every token, they are basically enjoying around 10% to 20% APR, and all these APR can actually converted to or going back to the stable coins. So it means that the stable coins will have a so-called real yield inside it. So we believe it will be a very useful things in the futures, especially when LP tokens will be more familiar, or the LP tokens will be more will have more usage in the future. We can see that currently some of the protocols are already accepting LP tokens as a collateral to borrow things, but the current stage is not a end game. I believe in the upcoming future, LP token is a really good asset in the DeFi world. They can be used as collateral. They can use to build a certain strategy on top of them. They can be used as the collateral to mint stable coins. All these are things, and with this data growing in the upcoming months or weeks, we can see that this is actually a trend that we can foresee, that LP tokens can actually be the collateral to mint stablecoin. And with these features, we believe it will be a very positive influence to Vaultka as well as the perpetual debts, because once we have our own stable coins, we can have all the things, all the value accrued to the stable coins. We can build a stable coins with the highest real yield. We can build the stable coins with the most sustainable yield. For example, we can see that currently we seldomly find some good yield opportunities with single staking a stable coins, as you just search around in DeFi Llama, right? So yield opportunities is not too easy to find nowadays. So if we can build a stable coins mainly backed by these LP tokens, which means the real yield offered by these stablecoins will be much more higher than what we can see currently, and we believe it will be a very high, very um, high potential for this field of development.
Yeah, absolutely. I am super excited to see you guys roll that out. And so when are you guys expecting the stable coin? Towards the end of the year?
We believe it will be around Q4 of this year, or Q1 of next year.
Okay, very cool, very cool. I'm looking forward to seeing it. I'm just looking forward to watching you guys progress the rest of the year. You got a lot of things coming. I put some some USDC in the Saki vault, and excited to see that APR go up too later on. So very cool.
Cool.
All right. Well, I think I think that kind of covers it for me, Matt. I'd like to just take this opportunity to let you kind of put out whatever last message you want about the protocol, or if there's anything we missed that you want to talk about.
Yeah, I think that's a very comprehensive coverage for today AMA course. One thing I want to add on is that I just want to encourage people to try out our VIP files, because the Hyper VIP event is going to end by 7th of July, so which means there are 2 days left. So yeah, so grab the chance to enjoy the 3x Hyper VIP reward. And yes, actually, I have one more. I need to alpha to share
Oh, let's do
to
it.
the
Yeah.
audience. Yeah. And actually, we are going to launch a liquidity incentive program in the coming weeks. So for those who missed the Hyper VLP event, for those person, we are going to launch a liquidity incentive program very soon, which means we can have an extra reward by using our vault. And apart from that, we are actually very close to the IDO. Actually, we haven't confirmed the date yet, but the IDO will be really soon, and we will definitely reward to our early users that tried our vault. Yeah.
Awesome. Yeah, that is some alpha. I will be paying attention and looking forward to it.
Yeah. This is an alpha exclusive to this AMA.
Hey, that means a lot. I will get this. I'll get this shared out and drop some little feelers. Make sure people listen to it.
Yeah, cool.
All right, Matt. Well, I really appreciate your time. Thanks so much for joining us. And I love what you guys have built, and I'm super excited to see what you guys have coming in the future.
Yeah, thank you so much for having me. Really excited to be here.
Yeah, absolutely. All right, take care. We'll talk soon.
Yeah, talk soon. Have a good one.
You as well. All right, thanks so much for tuning in, everyone. Really appreciate your time and support. Couldn't do this without you. If you're hearing this now on YouTube for the first time, please hit that like and subscribe button. Go check out Vaultka's social medias, get involved with them, and see what they're building. Once again, I'm Relentless from Defi Raiders. We'll see you next time.
Okay, cool. Bye bye.